All right, we are excited today. Welcome everyone to another episode of Meta Talks. We have a special guest. I say that every time, but this time he's very special because we just met him. He also interviewed us, which was great. And I love it was in a box, in a glass box. We can tell you about that later. But Karim Noorani from Linqto is here. Welcome.
Thank you, Daniel and Kate. It was my pleasure having you on our podcast. The box was beautiful. I've got to tell you that. We left the roof open so you could actually hear the music. So that was the fun part of the NFT Expoverse in Los Angeles.
Yeah, it's definitely one of the highlights there. It was, positioning is awesome. It was like the coolest box in the whole. There you go.
I know the cool thing about that is you can get a 360 video. So I got such great footage of Kate and you being interviewed and interviewing at the same time. That's what I love about that box.
Yeah, that was interesting. The box is a metaphor for a whole bunch of things that we have to break out of, right? So really, if we think about it a little bit more, are we all in boxes that we've created or other people have created for us? And how do we step out of that box?
Yeah, I love that. Hey, that's why the top is open. There you go. Think outside the box. There you go. I'll be jumping outside right there. Now, Karim, can you tell us about Linqto? I really love the name and the branding side of things. Can you tell us exactly what you guys do?
It's all about democratizing access to private investments that has always been very, very difficult for the ordinary investor. And I've got to categorize this a little bit. I'm not a financial advisor. I do not give financial advice. And the kind of investor that we're talking about is the accredited investor. The accredited investor is defined by the SEC and FINRA and regulations. So we stick to the term of accredited investor. Allowing accredited investors to have access to products or investments in companies that has not been possible easily and simply until we created Linqto. So Linqto investments.
And how do you vet potential Web3 project to invest in your own? Do you do that for Linqto or as a whole?
We do have a team of investment professionals and analysts in our company, and we look at companies that are medium to late stage growth companies that might eventually become a public company. If not a public company, then they will be acquired by another company. So finding liquidity in this very illiquid market. We look at what kind of companies are being invested in by the lead VC companies. And you can think of companies like Andreessen, BlackRock, SoftBank. These are companies invested. They do a lot of investments. We try to understand why they're investing in these mid to late stage companies. And then we look at the infrastructure that these companies are building, identify in our little format if we think they're great companies. Once we've gone through the investment analysis on our own, we then decide to invest in these companies, and we are on their cap table. So you'll see Linqto as an investor in the companies. We then allow the back end through a specific LLC for other investors to join us in the journey of these investments.
So what made you guys decided to really focus heavily on Web3 only, or is it open to a lot of projects as well?
It's focused on infrastructure companies, so it's not necessarily only Web3, but which companies are building infrastructure that allows Web3 to succeed. Which companies are we invest in companies in blockchain, but infrastructure companies, again, what blockchain companies are building infrastructure for other companies to succeed. For example, we just acquired a bunch of shares in BlockDemon, which is infrastructure company.
Yeah, Dan?
Yeah, no, it's really fascinating. And what I thought that was pretty amazing, the person who was, I'm not sure if he's employed or working with Linqto, but he was telling me at the event, he was telling me that he was actually a part of the community. And he was a part of the community, and he was telling me of just how involved everyone is. And I would love to hear about how did you create such create such a community that's really, it's so engaged with one another. He was just telling me about all these things that the community does, and the reason why he was working there is because he was in the community first, which I think is probably the future of employees.
So actually, that's a great question, and we're very proud of that. Ray Fuentes was the fellow you spoke to. He's our community manager. He actually was an investor on our platform. That's how he started. He used to work with a different company, started investing with us on our platform, loved what we did, and how we were creating this access to other investors to enjoy the opportunity of investing in private companies. And he would just tell us all the time, he says, when you do have an opening in your company, let me know, I'd like to join. And eventually an opening came up and he says, Ray, join the community. And it's our little Linqto community of employees. And he's been powering out and every day works harder than anyone else I know. But I could say that for all of the employees at Linqto because they're so passionate about what we do. And it's been great. We've had great success in more than Ray. We've had a few other investors who have always said that when there's an opportunity, and we've taken other people, we've adopted them into our company.
That's amazing. It seems like that's the way to go of hiring. Like, look who's in your community, who's investing, and they already know what you guys are doing. So it's easier to inject the core values and mission and vision, and it works.
It works very well. And I think, Kate and Dan, you've brought up a very good point. As we look at the trajectory of the new companies that are being built, paying attention to who you are working with, whether they're a customer, client, advocate, ambassador, it's important that the value and the mission of the company aligns with who you are providing services to, because they'll be your greatest fans for a long time. And if you give them the opportunity to either work with you directly or indirectly by owning shares in your company, which a lot of people don't do, then you've built a very strong internal company community and culture.
Absolutely. Dan?
Yeah, no, I mean, it's amazing. I think of, it used to be you look for a company and you apply, but you don't really know anything about it. And you hope you get the job because the title seems cool. And now it's like, so much about the company that I would think that the onboarding process is going to shrink significantly because you probably know so much about the job, you could just jump in. But do you see from a C-suite perspective and working with these companies that you're investing in, is that something you're looking at? Is the people seems to be a hot topic now, in the world?
It's important to pay attention to who the team is and who the people are, and we pay particular attention to the C-suite of those companies we're investing in, as well as the whole stack of employees. It's very important to see how those people align succinctly with the company value, whether they're talents. Well, talents and skills is something you all look at. The engagement that they have within their company is as important. But then who they are and what they've done previously, and you try to understand why they're there, right? So as we look at companies that are continuing to grow, we always pay attention to their careers page, who's coming in, who's leaving, and what kind of people that they're trying to speak to. And that's a very important, because it talks to us about the company culture and value and where the company is potentially going to go. If you go into a careers page and you say 15 openings for engineers, it gives you a pretty good indication that the company is still growing and growing rapidly, right? Mm-hmm. That's as an example.
Absolutely. And Karim, how does Linqto simplify the process of investing?
Ordinarily, let me walk you through a step of this. Ordinarily, if you were to try and invest in these companies that are private, there are two options for you. Either you are already a venture capitalist, so you get access to these companies to invest in. And when I say venture capitalist, I mean hedge fund or private equity. Or you can go to the market and try and acquire some of their secondary shares, which is all possible. But there are a lot of hoops that you have to go through as an investor to get access to this. Mm-hmm. what we've done is we've already gone through those hoops. We've made the investment. We make the investment first. So we've already done the due diligence. We've acquired the shares and we've put it on our platform. If you go onto our platform, once you're an accredited investor, it's, currently we have about 25 companies on the platform, and that can be found on Linqto.com. And you point at a particular company that you like, all the data information is there. You click onto it, and then you can invest. So you can do the start to finish investment process in under 2 minutes. And all the data that you need exists on that platform. We'll take care of all of the back end paperwork right from the point that you invest in by creating all of the documentation till that company is exited. And we'll manage all of that paperwork, which is very, very cumbersome.
Yeah. Dan?
Wow. So do you show where other people are investing within the app? So I'm seeing some of these new software coming out where you can track and see like what other people are doing. Is there something in there with LinkedIn so you can understand like, maybe I don't have the time to do a lot of research, but I want to see what other people are investing in.
We don't have we do not have a live feed that shows what other people are investing in, but you can tell if you were to go in, you can see on a particular company how many shares are available. And if you go in the next day, you can see again how many shares are available. So if you do a math, yesterday I saw 10,000 shares, today I saw 5, you know that it's gone. 5 is gone, right? So these shares don't last perpetually on our site because we buy into these secondary shares when we can get them. And once they're gone, they're gone. And then we may get it back, but maybe at a different price, either higher or lower, depending on the market.
Is it easy to sign up as one of accredited private investor, Karim?
Easy as pie. You should try it.
So 1, 2, 3.
1, 2, 3. Go onto the website. Say, I'm an accredited investor. That's the first step. If you can self-accredit, and then you can decide that you wanted to buy something, and you can do that. From that point, though, we will collect documentations that verify that you are an accredited investor before we let you actually acquire the shares or the equity in the company. But once you've done that once, then that's it. Then the next time it's under 2 minutes.
Dan?
Yeah, that's amazing. Do you have any success stories, or is there something that stands out? Like maybe, I don't know if you can share of something that you personally or somebody that or linked to where it was like, wow, this was like a home run, slam dunk. I don't know if you can share those things. I don't know the rules around what you can or can't share.
So it's quite simple. So we were early investors in companies such as Coinbase, Robinhood, Marqeta, SoFi. We acquired those secondary shares early on before the companies went public. There's some folks that got in at the same price that early on when we bought them, and when the company went public, they made a significant return on their investment. Now, market timing is always weird. So if those folks held on to those companies for a long, long time, then with the current revaluation in the public markets, they probably didn't make out as well if you held on to it. But if you liquidated for cash, you made a lot of money. To clarify, when we invest, we're hoping the companies do well, and we've had 6 to 7 exits very early on in 20 and 21. So our other investors saw some return on that. Sometimes the public markets don't favor the pricing, and you're going to probably lose some money, right? But the difference is when we're winning, you're winning. When we're losing, you're losing. So we're in this together. It's not like, hey, we don't care what happened to you, because we're the first investor.
Dan?
Yeah, that's amazing. I'd love to hear your background. What did you do before this in life, and how did you get into this?
So I've been around the block a little bit, several times around very large blocks, actually. I've done a variety of things. I started my career as an entrepreneur. I went to school to learn international trade and finance and economics. Then went to Kenya, where I was born, built a few businesses there. That was my first foray into entrepreneurship. I moved to the US in 2000, did the traditional um, work, which was become enterprise sales for a few different companies, including financial companies and two other public companies. Did that for a long time. Got very, very interested in the whole startup scene. I think being an entrepreneur is something that you're born with. You can learn a lot, but you can't develop that skill. So I was dealing with a lot of venture capitalists and startup companies when I moved to the US, and it was something I was very, very interested in. And seeing the successes that a lot of startups had, of course, a lot of failures as well. I was always wondering how to get involved with these companies early on. And so once I had enough savings, I started making my own angel investments, keeping in mind that angel investing is a risky business and 98% of those companies fail. But if you make one or two good investments, then you're going to see a lot of success. And as the journey continues, I found Linqto, and Linqto was like, hey, let's democratize this whole business of allowing others to invest in companies that had already passed that early stage and were on their way to becoming successful companies. And so I invested in Linqto at that time in 2016, and 2019 we released the first uh, platform iteration, and we've seen success, a lot of success since that day.
Mm-hmm. Love that. Now, Karim, what are some of the learnings there getting involved with startup? That's a whole new war right there, right? You're gonna be broke for the first 3 years. And can you tell us what are some of the I want to hear about some of the learnings from getting involved with so many startups. Some of them fail, some of them really did so well. I want to hear. I think we can help our audience with your experience.
This is not an easy task. Sometimes what we think is that everything that we invest in will be a home run, just because we have this notion that we are great stock or company pickers, and it's never the case. Never the case. So what I would do this is put your entrepreneur hat on and your investor hat on first, and pretend that you've invested in certain companies. Meet the team, understand the market, understand what their potential is, and say, okay, I've put in $10,000 or $100,000, whatever the number is, into this company. Watch what happens with that company. And then you can step back and think about yourself and says, okay, did I make a good investment decision? Because keeping in mind that 98% of those companies will fail. So, and the challenge is a lot of investors invest with their heart, which is, I really like this sector. I really like the team and what the company is doing. And you think you can, but in the same time, you're thinking with your experience, I can help them change direction or grow or add value. But oftentimes, the folks who've created those companies, the founders, already know or think they know what they want to do. So by the time you invest, you're actually just a bystander of
Mhm.
seeing how they execute. Keep that in mind, because unless you take a significant portion of the equity of the startup, the actual effect that you will have in the company is minimal. They will take your check, but the effect that you will have, unless you're phenomenal at something, will be minimal. And very few of us are phenomenal at most things. So be cautious of who you're investing in and why. And don't be afraid to ask the following questions. I want to see your bank account. If you're raising $5 million, you tell me that you've done well. Let me see what you have left in your bank account. The company will also tell you that I'm selling a lot. I've got a huge pipeline of sales. Then ask them, let me see your books. Let me see how much revenue you've actually got. The third thing is interview their core team and try and understand what's not being said, right? Because the team will affect the growth of the company. And if the founders are not aligned with their team, that will create friction, and that friction will stop the growth and development of the company, or at least create a lot of speed bumps. So all the questions that you think you should not be asking or are afraid to ask, those are the questions you should be asking. Now, oftentimes, depending on the market you're in and the companies that you're trying to invest in, the founder will say, well, if you don't do this investment in the next 90 days, the opportunity will close. Well, guess what? Walk away.
Mm-hmm. Yeah.
Because if you don't know what's going on, that money is just as good as thrown away.
Wow. That was gold right there. Especially in this emerging technology where sometimes, you know, companies, it sounds so great, but there's a lot of disconnect when talking to some of the core teams. They're not communicating. Like, how is this company run? And they don't communicate. Like, they have no clue what they're doing. If someone's saying X and someone's saying Y, it's like, whoa, this is such a hot mess, but everything sounds great in social media.
Yeah, and what I've done on several companies that I've been interested in is I've actually offered my services for free, and I says, guys, I'll help you do this, whatever that may be, whether it's finding them their next employee, whether it's finding them their next channel partner, whether it's helping them raise more funding. I said, I will do this for free, and I'll give you 60 days, 30 days, whatever the days I think they require. And that gives you great insight into how it is to work collaboratively with the team. Do they support you? Are they on message? Do they give you access to information and documentation? And the more they don't, the more you have to think about it.
Mm-hmm. Absolutely. I'm kind of curious. Any one of those companies that you asked for the bank account, what does that look like? How did they react? Is a good response or freak out response? I'm curious.
Yeah, it's very easy. If they say, okay, here for sure, here, take a look at our bank account, take a look at our sales book, and if it's there, they've got nothing to hide, right? They'll have you sign an NDA, which is fine, but if they don't share it with you, or they sort of like shuffle the paper, then it's okay. That's telling you something, right?
Absolutely, Dan.
This sounds like a red flag. So we were discussing yesterday. We were actually listening to this masterclass with Richard Branson, and it really got me thinking. And he was talking about timing. And I know some people talk about luck and skill, but I was thinking like, wow, you know what? Maybe what really separates these companies is timing. They were at the right place at the right time, but it was the founder that could really see that timing and then implement. I think that's what actually separates people. What are your thoughts on that around, success is a lot of times around timing, and then also the ability for those founders to implement at the right time?
I've been involved in a couple of startups, more than one, more than four, that we built a product, we built the technology, where we thought we were there with a beautiful solution to whatever we were tackling. And we failed because we didn't have enough money and enough traction for the market at that time. When we look back and we say, okay, and when we look back, if I look back 10 years to these companies that we developed, the timing for that company would have been 5 years ago, right? During the pandemic, one was an online education company. At that time, we developed the technology. It was beautiful. We had the right market. We had the right opportunity. And we didn't have the right revenue. We didn't have the right customers who were willing to do what we wanted them to do. And we shut the company down. So the question really becomes, did we have the skills to deploy the company? Yes. Was the timing right? No. Really, the question of timing becomes, do you have the money to sustain yourself till the timing is right? Yeah, if we had enough money to run the company another 5 years from that point that we shut it down, we would have been in the perfect place at the right time. So when they say timing, it all means the timing is correct. It could be 1 year, 2 years, it could be 10 years. But are you there when the timing is right? So the question really becomes, is do you have the funds to sustain yourself till the timing is right. And if you start to build when you think the time is right, you're probably already behind 3 years.
Right? Just like any design. Like if you see it in the market, they're already 5 years late.
Yeah,
right.
Absolutely.
Yeah. In Karim, in my experience, I built several startup, and I didn't have the luxury of getting funding. I bootstrap it, so it has to be accurate for me to sustain. So pretty much I have a good record of sustaining all startup bootstrapping because I know the timing. And not every entrepreneur can, not only execute that, but connecting that data of when to push that gas pedal.
And I think, Katie, what you've said is really important for everyone to hear. And Daniel, this goes back to your question. It's all about timing. Also think through the timing is different for different groups of people. So you may be building a company for in your mind what you think is the right audience. And they may not be catching on. So the idea would be change your audience, change your customer profile, and the timing may be right for them at that time. So it really becomes about timing is, does the infrastructure exist? Maybe you got to change what you think you or who you think your customer is, because there's a different group of people.
Yes. And that talent of learning when to pivot is the key. And that is a lot of unicorn. I get a chance to talk to one professor at MIT, and he interviewed at least 20 unicorns in the world. And it has to be, pivoting is one. Like you said, you build this company thinking this is your customer base, but then you're not getting the traction. So you have to pivot into totally different sets of audience.
Yeah.
Not everyone, but I think the problem is sometimes entrepreneurs stick to that. This is exactly my clientele. Well, you're not getting the traction, so you got to pivot.
Yeah, you have to.
Yes. Yes. Dan?
And yeah, and I love that. Thank you for that. I think you both could have a whole conversation around pivoting. And Kate's nickname is actually the Pivot Queen. I don't know if
and I would love to have a whole conversation about that, Kate, because it's really, really, really important.
Mm-hmm.
I know it's really important. So I have another question around diversity with funding. So this is another hot topic. We were just answering some questions on this earlier today for a publication around, where do we see women, especially with Web3, metaverse, new technology, emerging tech. A lot of women are a part of it versus I'm sure in the 90s, there was very few women in the beginning phases of the internet. So when it comes to diversity and investing and funding, where do you see, not necessarily with Linqto, just your general thoughts, where do you see, investing in the future into people that probably in the past would have had even a harder time getting funding?
If you look at globalinvestorconference.com, the URL that we also use, globalinvestorconference.com, there are some blogs that I've written there. One of them is about diversity and the stats around funding for women and of color or orientation. And the stats are amazing that 98% of the funding does not go to that minority class. It's still based towards men, and generally white men if we're talking about North America. We on that same URL, if you go to Linqto Learn, we've had webinars that talk about this particular topic. And in fact, we have a monthly women's series on Linqto Learn where women are talking about women investors and investing in women. And this is coming to the forefront as we start to realize that in particular, not only women, but if you have a diverse group of founders, developers, and creators, what that does to your company is inject some nuances that you wouldn't ordinarily see from a typical white male founder from an Ivy League college, because that is who they are. That's who they surround themselves with. And that's the market that they cater to, right? Which is a very small percentage of the total population. So if you start to bring diversity and invest in diverse groups, you'll start to see a whole different lens of what's potential and what the opportunity lies. And this goes back to Kate's, and I'm sure she's seen this. If you bring in different sort of founders or investors, they're opening your eyes to a different market.
Mhm.
And so you, again, pivoting, timing, resonance with your potential clients or community changes with diversity. If you look at what women in general have been through as they go through their life stages, they're much more resilient, creative, and motivated to succeed, right? Because of being just that gender, right? So there has to be focus on that gender because of how they are created and their DNA around being a woman. And so it's not limited to Web3 or blockchain. It will transform any sort of investment environment as we move forward, as long as we pay attention to the person, their background, and what they can do.
Mhm.
That is sort of the criteria. Don't pay attention to the color, creed, educational background, but who are they? What have they done, and what can they do? See the potential in that, and that's what you're investing in.
Mhm. I'm Karim. I'm kind of curious. What are some of with a lot of this startup jumping in Web3? Can you tell us the current environment when it comes to investing? Is this the right time to do it? I mean, I'm curious.
Yes. Let's understand Web3, Web2, and then there's Web3, right? But there is Web 2.5 that no one's talking about, right? If you are going to arrive at Web3, you have to go through Web 2.1, 2.3, 2.5. And that is a transition. And that is a leapfrogging effect. So you have to look at all the intermediate steps of companies being created and that will succeed to elevate us to Web3. Someone talks about Web3, yes, but what about the companies who are in Web 2.5? Because they're creating the infrastructure for Web3. So let's pay attention to that first. That will become Web3.
Absolutely. And we're getting into this hurdle. We're creating an event in the Philippines, and some of our partners dominating in a Web 2.0 world. And now there's kind of a culture of some of the fanatic Web3 that we're not open to you guys because this is our world. No, you need the Web2 learnings, expertise, and talents and skill sets to make Web3 or Web 2.0 even a scalable and better for all.
Yeah, and what I've seen actually, Kate, from the Philippines, a lot of creative and innovative entrepreneurs and funding is coming from the Philippines because they're building for the larger market. So, and the challenge with Web3 and the transition from Web2 is people don't quite understand what it means.
That's
Well,
true.
what is the difference between Web3 and Web2? So let's go through Web 2.5. Let's fund those companies first.
Absolutely. There you go. Dan?
Yeah, it makes sense. But everyone could have a different definition. Yeah, there's an interesting around like, you know, if you're gonna do something in blockchain now, people are like, well, how long have you been in crypto? How long have you been in blockchain? As if that really matters. But it's fascinating the dynamics around the world and how people are, and I think there's a lot of egos and stuff. So, hey, once we all drop ego and we all collaborate and work together, I think we're gonna really win. But I know we're at time here, so Kareem, would love to hear. Can you just share with everyone, where can they find more information? How can they link to? I know you have Linqto Learning and link to other things, and just the name, even Linqto, you actually explain it to what it means and how you define it. So tell us everything and how they can get in contact with you as well.
The best way is, first of all, if you are into learning, then join our Link to Learn webinars. We have that 2 or 3 times a month. They're always interesting. You'll find that on globalinvestorconference.com. If you're interested in investing in mid to late stage growth companies, look at linqto.com. If you want to get in touch with me, I'm on social media, LinkedIn and Twitter and various other places. If you do want a personal connection, just go to my LinkedIn page, Karim Noorani. But tell me why you're connecting. Tell me that you heard this podcast here with you, with Kate and Daniel, and what it is that you want to speak about. I'm always willing to assist, but a lot of people don't take the time to actually write a message. It's like, hey, connect with me. Well, why should I, right?
Or the
Tell me-
automated messages in the spam
yeah,
emails. And it's like, come on, can you customize it? At least pay attention who you're talking to.
yeah, exactly right. Exactly right.
And I think people don't understand that it's hurting them utilizing, you want a shortcut, but when it comes to building relationship and you're trying to build relationship, you don't know who you're connecting to.
Katie, that's such a weird thing, right? It's like I get decks all the time. I'm raising money. Look at my deck. It's like, why do I need to take 10 minutes, understand whether you're speaking with the right person, and tell me why. They want to speak to Daniel. They want to speak to Katie. It's like, hey, write a message and tell you why. And that takes 10, 15 minutes tops. If you're not willing to take the time to take that step, what makes me think you're willing to take the time to build your company?
Yeah. Why do you think I would write you a check?
Yeah, exactly. Why?
The best message is where it says like hi and then it says parentheses, because the auto, like they made a mistake and didn't put the autocorrect. And
Oh my God.
those are there's some hilarious, like you could do a whole thing on like LinkedIn messaging gone wrong. It's really bad.
It.
And I have to admit, I was lazy during a period of my time, and I tried these things, and I'll get messages back saying, "Karim, take the 5 minutes." There.
That's so true. That's so true.
Such an honor talking to you, Karim. I can talk to you forever. Entrepreneurship and pivoting and then startups, but it's so much fun, Dan.
Thank you so much for being here. Appreciate your time. And everyone, check out Karim and Linqto, and make sure you give him a good, well thought out message on LinkedIn. So thank you for being here.
Thank you so much for hosting today, Daniel and Kate. I really appreciate it. Thank you.